Down payment assistance programs are being marketed like they're the greatest thing to ever happen to home buyers. I mean, who wouldn't want to buy a house with little to no money out of pocket? And look, sometimes these programs do help people become homeowners, but there's a side to these programs that almost nobody talks about, because what sounds amazing up front can actually cause a lot of problems down the road. I'm talking about payment shock, hidden costs, refinancing headaches, and financial traps the buyers never saw coming. And after doing mortgages for over 20 years, I can tell you that these programs absolutely do help some people. And for some, it absolutely wrecks them. So today, I'm talking about the ugly truth about down payment assistance and what you need to know before signing anything. What's up guys, Aaron Klaus with New Way Mortgage. I've been doing mortgages for over 2 decades, and over the years I've seen down payment assistance go from somewhat of a niche product to being marketed absolutely everywhere. Instagram ads, TikTok clips, loan officers are marketing buy with 0 down, keep your savings, don't wait to buy. And listen, there's some truth to that. Some buyers genuinely benefit from these programs, but there's a lot of marketing out there that leaves out the downside, because the reality is most buyers focus on getting into the house without understanding what the financing is actually costing them in the long term. And honestly, I get why these programs sound attractive. Saving money right now is brutal, especially in states like where I'm at in California. Home prices are high, rent is high, insurance is high, groceries are ridiculous, and people feel like if they don't buy now, it's never gonna happen. So when somebody says, hey, you can buy with almost no money out of pocket, I understand why people want to jump on that. And emotionally, that makes sense. But financing decisions should never be made emotionally, because with home loans, the down payment is only one piece of the equation. Hey, and before I dive in, if you like no BS mortgage advice, make sure to hit the subscribe, smash that like button. All right, let's get to it. So here's the first thing that potential buyers need to understand about down payment assistance. We've all heard the saying that there's no such thing as a free lunch. There's no magic bucket of money. And although there are some down payment assistance programs that use grants, most down payment assistance programs are actually loans. That means you're borrowing the money, sometimes with deferred payments, sometimes it's monthly payments, sometimes it's even forgivable after a period of time. But often there are strings attached, and the problem is that buyers typically don't realize it until it's too late. All right, so let's talk about the thing that I dislike the most about down payment assistance: higher interest rates. That's right, the interest rate on down payment assistance is going to be higher than loans without down payment assistance. And this is typically where buyers get crushed over the long term, because down payment assistance does not offer the best market rates for the program. Why is that? Well, where's the money coming from? Remember, there's no such thing as a free lunch. So one of the ways that lenders pay for down payment assistance is through charging higher interest rates. For example, maybe the market rate on an FHA loan is 6%. Well, on a down payment assistance loan, it's probably going to be 6.75%. And most buyers think, well, who cares? I got help with the down payment. Meanwhile, they just added hundreds of dollars extra to the monthly payment every single month. And over time, that adds up to tens of thousands of dollars. Not to mention that that higher interest rate impacts how much you can qualify for. The higher the rate, the less you're gonna qualify for. Okay, so the next ugly truth about down payment assistance programs are the fees. When it comes to down payment assistance, lenders basically, they just don't have the margin that they have on normal programs. So guess what? They're gonna charge significantly higher fees for down payment assistance programs. Things like additional lender fees, bond fees, discount points, and just in general, worse pricing overall. And I'm not saying that lenders are being shady by doing this. When you go to a store to buy something, that store has a margin on the product that they're selling. It just comes down to the product that we're talking about, down payment assistance. There's simply literally little to no margin being made in these loans. And because of that, your fees are going to be significantly higher on these programs than otherwise. And in many cases, the down payment assistance ends up costing more than the actual benefit that you're getting from it. Because you got to keep in mind, when you're buying a house, yes, you have the down payment, but you also have closing costs. So let's say that your down payment assistance was covering 3% and you didn't have to come up with that 3% down payment. But if your closing costs are 3% higher or close to 3% higher than what they would be otherwise, it's almost a wash. And then you're back to what I was talking about with the higher interest rate. So it really calls into question whether this program is a benefit or a shiny object that lenders sell. All right, so let's move on to the next ugly truth about DPA programs. And this one ends up surprising people down the road because it's going to cause problems a year later, 2 years later, whatever, when you go to refinance. Because most of these programs come with a second mortgage, which means that you borrowed that down payment, and yes, it has to be paid back. And this becomes really painful when rates drop. Let's say you buy the house and a year later, interest rates have improved to where refinancing to a lower rate would save you a ton of money. But here's the problem. When you refinance, you still have to have enough equity to qualify. And because the way these programs work, you're basically doing 100% financing, sometimes up to like 103, 104% financing. So you're already tapped out on equity when you start. And now rates have dropped. You want to refi and get that lower rate, but you can't qualify because you don't have the equity. So you either have to cough up the money to come up with the difference, or you simply don't refinance and you keep your higher interest rate, which ends up costing you a ton of money over time. I've had several people reach out to me this year as rates were dropping. They wanted to refinance. We looked into their current loan, and sure enough, they did down payment assistance and they did not have the equity to qualify. And the worst part is nobody explained this to them up front. Now, before everybody in the comments section loses their mind, yes, some down payment assistance programs are good, but they're good for the right borrower for their specific scenario. For instance, if your down payment assistance program is forgivable, meaning that once you get that second mortgage, it goes away on its own and you don't have to pay it back, that can be a positive thing. Also, if the interest rate that you get on the down payment assistance program is close to market versus a lot of them being way out of market, maybe it makes sense. And in many cases, buying now makes sense versus waiting even though you have imperfect financing, especially if you live in an area where home prices are continuing to rise, rents continuing to rise. But this isn't black and white. The problem isn't that these programs exist. The problem is that most of the time buyers don't understand the trade-offs of using these programs. So if you're considering down payment assistance programs, here's the things that you need to look at. Compare the interest rate, the monthly payment, the total fees, the loan structure. Is there a second mortgage? Is it forgivable? And what happens when the time comes for you to refinance? Are you going to be able to refinance? Because sometimes the smarter financial move isn't using the down payment assistance program. Maybe it makes sense to wait a little longer, improve your credit, pay down debt, borrow the down payment from your parents. The boomers have all the money anyways, right? Now look, I'm not here to scare you out of buying a house or using down payment assistance. My intention here is to help you avoid making financial mistakes that you're not going to find out until years down the road. Because the reality is sometimes the cheapest way to get into a house ends up being the most expensive over the long run. Now, if you want help comparing loan programs, FHA, VA, conventional, down payment assistance, all the different programs, reach out to me. I'll give you free, no BS advice. And if you want more real world mortgage advice without the social media fluff, hit the subscribe and I'll see you on the next video.